Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Iac Inc. Annual Report. Iac Inc. offers a diverse range of businesses and services across various sectors. At its core, the company publishes digital content through several brands, including People, Better Homes and Gardens, Verywell, Food and Wine, and Southern Living, among others. These publications cater to women and lifestyle interests. In addition to publishing, Iac operates a digital marketplace that connects consumers with home service professionals for various tasks such as repair, remodeling, cleaning, and landscaping. This platform is offered under the Angie Ads and Leads and Angie Services brands. The company also provides general search services through its websites ask.com, reference.com, consumersearch.com, and shopping.net. These platforms offer a range of information and content to users, including product research tools and vertical shopping search capabilities. Furthermore, Iac offers direct-to-consumer downloadable desktop applications and operates several online destinations for specific needs. Care.com connects families with caregivers for their children, aging parents, pets, and homes, while Vivian Health is a platform that connects healthcare professionals with job opportunities. The company also produces and distributes feature films through its Iac Films division, which offers production and producer services for theatrical releases and video-on-demand services. Additionally, the Daily Beast website provides news, commentary, culture, and entertainment content to users. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what might cause an unchanged stock price over a year. The stock market is inherently unpredictable, and various factors can contribute to a company's stock price remaining stagnant for an extended period. One possible reason is a lack of significant news or events that would impact the company's performance or industry trends. This could be due to the company's stable financials, consistent growth, or a lack of major competitors. Another factor could be the overall market conditions. If the broader market is experiencing a downturn or stagnation, it may drag down the stock price of even well-performing companies. Additionally, if there are no significant changes in the company's operations, management, or products, investors may not see any compelling reason to buy or sell the stock. Furthermore, regulatory issues, lawsuits, or other external factors can also contribute to a stagnant stock price. If a company is facing challenges that are not immediately apparent, it may not be reflected in its stock price until there is a significant development or announcement. In some cases, a lack of analyst coverage or research reports on the company can also lead to a lack of interest from investors, resulting in an unchanged stock price. Ultimately, the reasons for a stagnant stock price are complex and multifaceted, requiring a thorough analysis of various factors to determine the underlying causes. Iac Inc. maintains a market capitalization of $3 billion, broadly in line with the industry peer group. Iac Inc. trades at a lower price-to-book ratio of 0.61 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 34% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline at Iac Inc. are multifaceted and influenced by various factors. One significant trend is the decline in search revenue, which has been attributed to Google algorithm changes and policy updates. This decline has impacted several segments, including People Inc. and Search. Another key factor contributing to revenue fluctuations is the impact of the Mosaic Group asset sale on February 15, 2024. The revised terms of the services agreement with Google have also led to revenue declines in some segments. Furthermore, shifts in advertising revenue patterns across different segments and years have been observed. To gain a deeper understanding of IAC's financial performance, it is essential to analyze these summaries alongside other relevant information, such as annual reports, quarterly earnings calls, and industry research. By considering multiple sources, one can develop a comprehensive understanding of the primary drivers of revenue growth or decline for IAC, Inc. Net income experienced a significant downturn between 2023 and 2025. Initially, it decreased from $256,726 to -$539,897 in 2024, indicating a substantial loss. However, there was a slight improvement in 2025, with net income decreasing further to -$104,026. Profit margins also underwent changes during this period. The operating income margin increased from -1.6% in 2023 to 2.1% in 2024, suggesting an improvement in profitability. Nevertheless, it decreased again to 8.2% in 2025. Notably, profit margins for 2024 and 2025 were not directly reported. The reasons behind these changes are multifaceted. The exclusion of non-cash expenses such as stock-based compensation, depreciation, and amortization of intangible assets contributed to the fluctuations. Additionally, the ongoing revenue decline in the print business and increased cost volatility also played a significant role. These factors collectively impacted net income and profit margins, resulting in the observed changes. The company has demonstrated a consistent ability to generate positive operating cash flow in recent years. In 2025, the company produced $64,035 in operating cash flow, indicating a strong financial performance. Similarly, in 2024, the company generated an impressive $192,463 in operating cash flow. This trend suggests that the company is effectively managing its operations and generating sufficient funds to support its growth and development. The company's debt level has undergone significant fluctuations over the years. While it decreased by $21.3 million due to refinancing transactions in one period, it increased significantly in another, reaching a total long-term debt of $1.44 billion at December 31, 2025. The term loan Aminus One also saw an increase from $297.5 million to $341.3 million. In terms of interest expenses, there has been a notable decrease of 12% to $120,027 from $135,719 in 2024. However, the interest income decreased from $66,913 2024 to $46,580 2025. The company's term loans also bear varying interest rates, with term loan A-1 bearing SOFR plus 2% and term loan B-2 bearing SOFR subject to a minimum of 0.5% plus 3.5%. Management is optimistic about the company's outlook, citing opportunities in building companies and investing opportunistically. They are competing in the digital business by maintaining reach to consumers, improving content quality, and adapting to search engine changes. Key factors for success include expertise, audience engagement, brand recognition, and monetization solutions. The company is also expanding its enterprise solutions with family caregiving benefits and services, leveraging its presence on care.com. However, management acknowledges the challenges posed by a declining print business due to reduced consumer demand, advertiser spending, and competition from digital media. To mitigate this, they are taking steps to reduce exposure to print through restructuring actions. Despite these challenges, management remains committed to investing in core businesses and exploring opportunities for growth and expansion. They expect a challenging year ahead due to the current economic environment and industry trends, but are confident that their strategy will position the company for long-term success. The company has made several strategic acquisitions and divestitures over the past few years. In terms of acquisitions, the company purchased Meredith Holdings Corp. In December 2021, invested in MGM by purchasing 1.1 million common shares for $40 million in the fourth quarter of 2025, and acquired IAC Films without a specific date mentioned. The company has also made significant divestitures, including the elimination of print components for certain brands, reductions in circulation for others, and restructuring actions that included layoffs during the third and fourth quarters of 2024 and 2025. Additionally, the company sold Mosaic Group's assets on February 15, 2024, and spun off its full stake in Angie Inc. to Iac stockholders on March 31, 2025. The acquisitions are aimed at expanding the company's reach and capabilities, while the divestitures are intended to streamline operations and focus on core businesses. The company's strategic moves demonstrate its commitment to growth and adaptability in a rapidly changing market. The company People Inc. has a history of distributing dividends to its parent company, Iac. In January 2024, it distributed $105 million to Iac, indicating that the company prioritizes shareholder returns through dividend payments. In addition to paying dividends, People Inc. has also been actively buying back shares from the market. Notably, in 2025, the company repurchased a significant number of shares, with a total of 8.2 million shares bought back at an average price of $41.18 per share. This is not an isolated instance, as the company had previously repurchased 7.7 million shares in 2025 and another 3.2 million shares in 2023. These actions demonstrate that People Inc. is committed to returning value to its shareholders through both dividend payments and share buybacks. There are concerns about inventory buildup or supply chain disruption, particularly highlighted on pages 23 and 61 of a report. On page 23, the issue is mentioned as a general concern regarding supply chain disruption. Additionally, on page 61, it is noted that there has been a decrease in accounts payable and other liabilities due to a reduction at search in accrued traffic acquisition costs and related payables. This suggests that there may be issues with inventory buildup or supply chain disruptions affecting the company's operations. That concludes the financial summary for Iac Inc. Feel free to comment below, and I will be happy to answer them when possible.